I would say the overall in 2012, on real estate fundamentals, vacancies were low at 3.1%. You had a steady growth of 2.2% in NOI and revenue. There's very little pressures, maybe a little bit of pressures in realty taxes because Canadian governments or Canadian cities were looking to increase their revenue base. But overall, it's been, from real estate fundamentals, it's been great. From an acquisition point, there's been some very large transactions, both on single asset deals. Homestead bought Parkway Forest. You had Oxford or Ormers buying La Cité in Montreal, which were two record deals. And then from a large portfolio deal, you had the privatization of TransGlobe REIT by a consortium of institutional buyers. Cap rates right now are very low. They're all-time historical lows. This has been fueled mainly by the low interest rate environment that we are in, but also because of great, strong real estate fundamentals. But also a main driving force that is sometimes overlooked is that there's a lot of demand for this asset class in pension funds. And this demand of capital flows coming to the Canadian market with a very low lack of supply, not very much new construction, has created an imbalance where it's driven cap rates to historical lows. And I think this will continue to do it as long as people are looking for yield and looking for a low risk environment or return investment place where they can put their money. The story in 2013 in the apartment market will be very similar to what happened in 2012. Apartments will continue to perform well from a real estate fundamental. They're very stable and have very predictable cash flow. Also, they're in this environment where there's a thirst for yield for investors. Apartments will do very well in this type of environment.
I think a new developer coming to the sector has to be patient. I think developing multifamily apartments is very different than developing condos. And I think you need to multifamily is a long-term investment versus condos, which is a very short-term investment horizon. So I think you need, as a developer, you need to have the right capital source that is in the long term with you versus an investor that is only in the market to do 2 or 3 years. And so I think for new developers, you need to be very careful on who your partners are. In general, I think home ownership in Canada is becoming less affordable for most Canadians. And I think having an option of more rental is a good thing for Canada. Right now, the condo stock in general has been taking up the slack for new apartment builds, but it's not a perfect correlation. The condo units are smaller, they're owned by a lot of owners, and we really need new supply of rental in the Canadian context, and I think that will help alleviate. It'll be better services to tenants, larger suites, and overall that will help the rental supply will help the Canadian market in general for ownership. I think the best opportunity in multifamily is really in opportunities where we can create value on an apartment building, taking an old apartment building, renovating it, creating better customer service for the tenants, and creating value through new amenity space, new suites, renovations to this space. It's really to try to create a new apartment from the building unit to the rental. So putting retail in the bottom suites to create a whole new dynamic. And I think it's transforming the old buildings into better buildings in the future. I think on the multifamily sector, I think that what gets me excited is the opportunity still to create value in the sector, to create value on buying a building, renovating it, creating better product, and creating a better experience for our customers, the tenants. And I think it's also exciting to change the dynamics of our model in Canada to more of a customer service model, and really to cater to tenants as customers, and really improve that operations. And I think there's a lot of things that we can do in Canada that, especially in the States, are doing more, that we could follow suit, not just on the building side, but really much on the customer service side. Well, I think the biggest impact, I think there's two. I think one is to continue in the value add space where multifamily is still very fragmented. And I think there's still opportunity to buy buildings that need some tender loving care and renovate them and improve the management, improve the operation efficiencies. And I think the other biggest impact is taking own pieces of your own land and intensifying the existing site and developing some new multifamily apartment buildings on your existing pieces of land. I think tenants in general, I think there's different tenant mix. There's the millenniums and then there's sort of the empty nesters. But at the end of the day, I think they're both looking for one feature, and that is a living environment that they feel proud of, and a living environment where they're able to get customer service and feel at home. There's no one specific feature. Each one requires a little bit different things. But overall, they want a community that they feel proud to call their home and come to and live there. I think technology is a fascinating feature. I think technology changes so fast that in the next 5 years, the technology that we have today will be very different than in 5 years out. So trying to forecast what technology would be is going to be very difficult. Having said that, I think you need to have buildings that are adaptable to new technology. So, the iPhone 5, 10, 15 years ago, we thought the BlackBerry was the best thing. It's basically obsolete now, and the iPhone is a gadget. And then in 5 years, that might not be the case. But I think you need a building that allows you to adapt to new technology. So smart metering for utilities, more Wi-Fi in the building, different things that for me, I wouldn't even know about. But I think you have to have an open mind to new technologies that they come every 2 years. I think at first glance, it's to make a generalization of the total Vancouver and Toronto markets. It's hard to do. I think there's certain sub-markets in Vancouver and some sub-markets in Toronto that will continue to do well, and others that won't. I do think that the new legislation, the new sort of the 15% tax, put a little damper on pricing. But I overall, condo prices in certain submarkets, especially in Vancouver and Toronto, will continue to rise because there's more demand for condos than single detached homes. And I think this market will be strong for the next foreseeable future. Disruptor would be politics within the Canadian context, whether rent control, whether political question marks come up of increasing development charges, realty taxes. There's a difference between economics and fundamentals, demand, supply, and then if you immerse the political situation, that could be the biggest disruptor on what happens to demand and supply. I think it's more of a macro issue. I think it's stuff that we can't control, more like we were talking a little bit before, like the US elections, what's happening in Europe. Any potential wars that you don't think about. Stuff that you can't really think about keeps me up at night, but it's also the same stuff that we try to put on the side and not worry about only that stuff that we can control. So there's a lot of things going on in the world politically that can create some disruptions in the system. So that's what worries me.